What up, everybody? Lonnie here, Charts and Labs. Been a while. Took a little bit of a hiatus on the day trading account. I did lose pretty bad on a couple and been just so wrapped up with some other projects. I was also in the middle of transitioning out of my junk removal and dumpster business. And between trying to do my new projects, um, and and then also helping them transition and helping them with their parts and needs, being available for that. And then the volatility in the market was really bad timing, and I ended up blowing up the account. I got a little bit in there. I had a little bit left, like $100 left. I built that up to 500, so I'll show you guys that. I'm up to about 500 again for the month of March. I started with like 675, got up to like 1500, all the way down to like $80, $87, back up to 500, and that's kind of where we're at. So for the month of March update, my account was not that great. The war really messed me up pretty bad, and then trying to play these with volatility and the misdirection. I probably should have sat on my hands and got out. Um, so we'll jump into that. Let me share my screen. Something that I'm just really bad at not doing, that I want to get better at. It's a personal discipline like decision, I guess, or discipline, knowing your weaknesses, building your strengths. And yeah, so before we jump into this, I want to make sure everybody realizes I am not a financial advisor. This is not financial advice. This is just me sharing my strategies and experiences in both stocks and cryptos, in order to give you a familiarity and hopefully some comfortability in order to be able to participate in these markets yourself. Um, so let's check out this last month of March. And you can see that I had a couple wins and then bad loss, got it back up, bad loss, got it right back up, bad loss. And then I just kept getting nickel and dimed with a couple little spike ups. And I just never got enough to where I was taking profit consistently. And that's where I kind of went flat and I wasn't doing anything. So in the last 2 days, I tried to go back again, jumping back in there and got a couple wins. And I got a nice win today too. Today's is actually really sad. Today is one of those days that messes you up. So if we go into my history, you can see that I grabbed, that was yesterday, right? 584 call, one contract, 142. Is it not showing myself? Oh yeah. Bought it for 111, sold it for 142. That was my deal yesterday. That was a good deal. I think I even nailed a pretty good price point on that one. And then today I grabbed two of these right here at 7:34 a.m. Pacific time. I'm on the West Coast. So I grabbed two of these at 169. It was around 175 or so, 179. It looked like volume was picking up. If we look at this 734 kind of timeline, it's right in this window. And it looked like it was holding this support line that I kind of drew, based off of last Friday's low. And it looked like it was kind of building around there. I was looking for a move up, and I just wanted to get a quick scalp. It was how I was playing this. So got two of them at 169, thinking that I just needed to get to about $2 to make that play. Um, and so it came up to like 195, started slowing down on the contract price. So I set myself for 204, just above the $2 mark. It was like 20.8%. So to hit that 20%, nice little scalp. But and then I ended up buying this put, and I messed up on this one too by not taking my profit. So this is a tale of two tapes. That call, this one I sold. This is what I started. I bought this one at 269 and sold it for 333. This was what kind of kicked off the account again in resalvage. It was over $9 yesterday. Um, so here's the call that I bought, and I basically sold it right here at around in this window right here to $2. Literally swiped up on my phone to set the sell at 204 while it was sitting just like this with a bid ask spread around 195, 197, I think is where it was tinking with. And I thought I was going to catch a little pop and then stall out or just be cool with it. By the time my phone refreshed, obviously it was sold, and the price of this guy was five. It was 509, but obviously it hit 552 was the high. Actually, the high was filled over 626. It must have filled that on a spike, but not enough volume to confirm. But anyway, looking at 5. So I had two of these from $1.70, sold them at 2. It went to 5. Absolutely sick to my stomach because and literally it was just because I was like, yeah, I'm gonna place this sell and try to get that 20%. Very, very easily could have been a 150, 180% play. So then let's look at this one. As you can see, that was here I sold and I bought that put trying to play on the downside because max pain is 581 and this is sitting at 585 now. So I'm like, oh, I'm going to grab this for the pullback as this is starting to stall out and lose its spike. And it was not a confirmed breakout. So I'm like the fail point of this should get some profit. I did. I got a little bit of profit. I think I hit like 15%, but it wasn't enough to fill my order. And then it was shot down because the 0 day was later in the day. This is starting to be very reactive. Um, down, all the way up, all the way back up to profit. And I was getting ready to set my sell, and I had it set too high. I bought this put basically with my profits from today at an average cost of 87 cents per. It was at 107. I think is what I saw. And I had my sell order set for 111. So just barely missed. And as you can see, it reversed quickly off of that and dropped. It came back up a little bit, but again, not good enough that I was willing to place a sell. So I lowered it to 104. I'm probably gonna adjust that again. Um, because now we need a full full drop, like a big drop. That would be a huge profit. I think if we do 578 by 1230, that I only need, I got to do it by 12, 12, 12, 1210. What do I need? 580 could be tested. And as you can see, that's only going to be around 79 cents. I won't make profit on that. I needed to get down under by 12. So I have an hour for it to come down or go up. It's just kind of a gamble right now. Today's going to be end up being a wash, most likely. Because we got it spiked and then we got caught in this algo, and all I wanted was a retest um, of this line, or at least a pullback, and it just never came. We got oil going up. We got Tesla missing deliveries. There's enough bad news, but this is being held up. And I was expecting a sell-off going into the 3-day weekend. Just kind of try to anticipate a little bit of a play. And the reason I had it set up, 111 or even 122, I was looking closer to the 25 or 30% profit on that put because it was a smaller position. I was willing to risk more. And I wish I did, but let's get into the March challenge that I had. I didn't get many updates the last 2 weeks because I was mostly out of it, being too busy and preoccupied, which led to this account getting blown up. So we can check up Lonnie day trading as a loss. Lonnie day trading as a loss over this month. It shows a bigger loss because um, I was I was up and down and withdrew money and moved money, so it's a goofy looking number, but I definitely lost the as of the me versus the bots. So if we go into the grid bots trading on TXC, I ended up filling these guys up to $1,000 each to get my average down. So these guys didn't naturally grow that much. But here's where we're around 33, 38. I'm giving these guys a little bit of a cushion on the extra days because they were technically started before, but even though they didn't do much and it was going down mostly for that time. And then I kind of built the funds up for most of the month. And you can see that they actually were in profit here about 10 days ago, 2 weeks ago or so. We were in profit for a little bit. But what we can see is this right here is a reinvesting USDT. And just to kind of update these, we're going to go like this, turn it off for a moment, turn it back on so that any of the profits that it has created, $15.69 in a month from the arbitrage going back and forth, buying low, selling high. Uh, that one has 23.72. This one's got a couple more days. So between these two, um, 38 $38 or so, 39, maybe $40. These ones were kind of the ones that were participating in that challenge a little bit. This one was kind of going earlier, and these three were paused briefly. I had to unpause these ones. And then the one that I started in the beginning of March, I actually sold when I was in profit in order to build all these up to 1,000 each. Did I click this one? 1108, yeah. So now we're at 17 for this one. So that's $55 for the month between all these. And then we're gonna go like this and like this. 1642, 55, call it $70 or so is what my grid bots and TXC made me for the month. $70, divided by four. What is it roughly? 15, 18 and 18, 36. Yeah, roughly about $18 a week is what my bots were making me for the month of March. Not bad. And that's with TXC. TXC, if let's jump on this one and we'll go look at, freaking thing's not gonna let me win. Lost my profits from the day trading. The volatility in the market right now is tough doing 0-day trades. I should be doing longer dated stuff. I should be taking smaller profits and such, but I'm being negligent a little bit, I guess you can say. We're going to change this to a 45-minute time frame. This is using Bitmart's exchange. You can see that bit of a downtrend. So with a single ticker going mostly down. We did have this good run up and this good run up and this good run up, which is where profit could be made. That one got profitable. Oh, probably back. Is it March? On this run up. So we go back into March. We have a good little spike. And then we had this nice solid run up into the 21 cent. And then this time is where we're profitable. You can see these wicks down where there were some sells and captures. This is most likely from arbitrage across exchanges where one exchange was higher. So they were sold to be bought back over there. And then it bought the price back up. She calls me now. Now that I'm on a video, everybody's calling me. So there was all those nice little window of a downtrend channel started here, and you can see that the bottom of it formed that resistance, which failed. So looking to test this again and get back up. So good buying opportunity right here. Testing the support of this range of this wick. So TXC is in a good buying zone to get the average down on those bots. I don't have the funds to do so right now because I lost on my day trading account. Otherwise, I'd be bringing in a couple $100 probably, and I would love to buy some, but is what it is. So then we have the Polar Tensor that I was messing with, which is a generative AI trading bot that is doing trades for me. I've added some money to this. Plus, it has a little bit of an affiliate referral program, whereas some people sign up with you and sign up under you, you get a little kickback and bonus for their signups for the commission as far as referrals go. Nice little program, nothing crazy. The reason I really like this one compared to the hundreds of other ones that are out there is this one is doing everything in compliance. I've done a review on these guys. The big thing is you got to make sure you're being registered and you're running everything properly, audited and transparently. Too many of these projects are not transparent. I look at TXE. Bobby's doing Zooms every Tuesday. You know he's the founder. You know he's there. There's some of these other AI trading bots who've had three founders in 3 years, which is deceitful. They don't have any kind of audit. They don't have any kind of registry. You have to do shady stuff to have access to them, and I don't like that. So I stay away from those, even though some of those have higher yields and higher rewards and payouts, which is enticing. But I like the idea that I can leave this, and if I don't check on it, I wake up and I still think that it's there instead of being worried that it's not there. Solid tool to be diversified. You can see this month they had a solid 26% performance. The company keeps the percentage of that, and I get a percentage of that. I'm in a 60-40 split based on how much money I have in there. So I got like 15% of that is what I gained. Um, and this week so far, you can see 1% on Monday, had a flat Tuesday. It was actually down a little tiny bit for a little while. I think they were doing some maintenance also, which probably contributed to that. Up 1.5% on Wednesday, up 1.17% so far today, and you can see the trades are happening. What's cool about this one is it trades only in the most liquid times of the week, Monday through Friday, and it trades based on UTC for a trading session, and then it gets out. It doesn't overtrade. You're not overexposed. You're not susceptible to the weekend where the volatility could cause errors. So when we look at this wallet and deposits, we can come in here, investments, um, and deposits. These are all of them. Let me see. Doing some tests to see something. There's trading earnings. That's what I kind of want to see. So trading earnings. This first one I got $3.21. I had like a little half week, and that was partly February, partly beginning of March. 321 for that week. And then I added money to it as I wanted to build the actual account and kind of see what it's got. Then I got $25 for a week, $44 for a week, $39 for a week, and last week was $29 for that week. And so it's about 3% a week or so is what it's kind of averaging so far for me. And I think that was lined up because I had my sister to the account so that we can kind of track on the minimum. She's been in it for 3 weeks and from $100 to 109.40. Um, so she is the minimum, which is a 50-50 split. If you look at the where is that at? Bonus. No, where is that? Trading. I'm in the basic tier where they get 40% and I get 60%. The starter tier is 50-50. As you see, when I get to the next tier, $468 would be added. I go up to the where I pay a 35% performance fee for using their software. So I like this AI bot, this trading bot, kind of as a little background investment tool for me. I'm very happy with it. There's another one called Arbcore, and I am leery of this one. So take this with a grain of salt. Um, the way that they operate and the way that they're doing is they're not doing spot trading. So as you can see in this live trading, bought Bitcoin, sold Bitcoin, and green is positive. So that's what this one's doing, is doing spot trading based on AI agents reading the market and trading. All the trade logs are audited by KPMG. So that's kind of a nice reassurance. Arbcore is one that I got into to kind of test but it's scary because it's got a little bit of that too good to be true factor going on. So these are the ones that it offers. It's testing all these ones. Um, to qualify for the pro, your contract with that individual one has to be $100,000. So it's big to qualify. It's basically got to be at least $100,000 value to get this pro percentages, which is huge. Like you look at Bitcoin Pro, 8%, and this is daily. This is the daily pay. Now, what they take is a 10% commission on Pro, and I think they take like a 15% commission, or maybe it's 20% commission on each trade on the regular is how they take their performance fees. It's not as clear and transparent as like Polar, for example, or other cryptos like TXC. So it's a little bit figure it out as you go. But what they're doing is right here on the exchanges is you see this difference column. It's using over 400 exchanges and instantly buying on the lower one and selling on the higher one. So when there's a difference on exchanges, and I can even go into coin, oh, maybe I can, dude, can't call me back to back. No, middle of my video, I'm busy. Come on, coin. Why are we lagging? What is going on? Of course, because I am internet's all froze. I will hold on to that. Anyway, there's a difference in prices of exchanges. When the bid ask has enough of a difference and that spot difference, they can instantly buy on this one exchange. You know, these are all the exchanges. There's a lot of crypto exchanges and instantly sell. So the math and the science to how it's doing it makes sense. I don't know how my gut is. I don't know if I trust it being offered to the little guy forever. So I'm trying to de-risk very quickly in this one, but it's hard to not at least try it because it's making money. So if anybody is looking at this one at all, just know that I think this one is very, very speculative, very, very high risk, but it does have some crazy payouts. They offer this ARB Pro, which is basically every quarter they're going to randomly announce throughout one of the days and offer it for a 24-hour period that a certain crypto they're going to allow you to buy that and get the pro rate even though you don't have the $100,000 invested into it. And they did it on Ethereum, which was cool. And so I came in and I did Ethereum. They offered, I think this was on Monday. So this has been for 3 days. And I started with like 0.05. Um, oh, I think I have to go to my balances. Still learning how to look at this. I started with zero point 0.5 and maybe like a little change. I don't remember exactly what it was, but it was, and I think this is close to about the same price that Ethereum was when I did it, but I did 1,050. So I'm up $100 in 3 days on that one. And that's a pro contract, which, so you see this, um, net arbitrage spread commission 10%. You can see where they're taking their 10% on the pro. So I don't know exactly what the spread is on the regular because on the regular it doesn't show. My regular one I don't have. I have Bitcoin and it doesn't show the same. The received arbitrage spread distributed among participants according to their liquidity volumes added to the overall pool. It doesn't show that. There's not the transparency and the consistency that they have on that pro contract to give us a good idea. But you can see it's Bitfinex and KuCoin that they're doing this on, and they're trading. So yeah, this one's loading, but kind of speculative, kind of cool. But again, the way that it works is so you lock in your money, you give them, and you have to send in whatever crypto you want. So like if you want to do a Bitcoin, here's the options that you have. So say you want to do Tether, you have to send them USDT to get Tether. You want to do Solana, you have to send them Solana. You want to do BNB, you have to send them BNB. You want to do Bitcoin, you have to buy Bitcoin. You want to do Ethereum and so on. They just added Polygon. Um, so here are on the basic contracts, these are your daily percent. And from this is what it's getting, and then you have to minus out their commission. Again, the pro is taking out 10%. So then when you go into limits, in order for you to do a Bitcoin or in order for you to do a BNB, in order for you to do Solana, these are your minimum deposits. So 50 USDT, zero point 0.5 Solana, um, 0.05 Bitcoin. I think that works out to be around 3,300 bucks or something is your minimum. One BNB, obviously, so that's 580. 1,025 is your minimum deposit. You can do zero point 0.5 Ethereum. You have to do 500 Matic, which is Polygon, and they're 9 cents a piece. And then for you to get your withdrawal, and it does the withdrawals once you hit this if you do an automatic withdrawal. So it's kind of nice that your money's not completely locked up, but your base number is. And then if you want to reinvest, it doesn't reinvest until you hit this number. Um, 10 USDT, 0.5, 0.1 Solana, 0.01 Bitcoin, zero point 0.2 BNB, zero point 0.1 Ethereum, 100 Matic, 10 XRP. Well, we're not in XRP yet. So it hits those numbers and it could reinvest and kind of lock up your contract or whatever. But what your contract is that it's going to 2.5x your money is what the contract is. It's actually an invoice and everything. Um, it create an invoice for you. And I have my Ethereum invoice and I have my Bitcoin invoice. That I got a 0.053221 Bitcoin is what I sent them, and their payment obligation is 0.133052 Bitcoin on the way out. And for Ethereum, I did 0.050811 Ethereum, and their payment obligation is 0.127 for the 2.5x. Based on the percentages that they're kind of doing so far, it works out to be like every 3 to 5 months they're going to fulfill a contract, which is crazy. So again, with that one, I'm very leery. Risk off as soon as possible is my suggestion, and play with house money and make sure that um, you're not risking more than you're willing to lose. There's been too many of these that have gotten shut down. So TXC over here, let's look at their, don't have any money to buy. This is my little window that I'm kind of looking at, waiting for this to kind of consolidate in here and looking for a move to the upside. It's got to clear this 1934, and then we should see some upside on that. And you can see that this is starting to build a little support base. So looking for a move up here, hopefully back into the 19-cent range, because we can see with right here that even these guys pass through, and maybe it's this one. So I'm going to make this one be a slightly different color. And this one's going to be a slightly different color just to kind of signify, but this one's kind of a resistance right now, trying to break through that. So there you go. No, use your tools. Diversify is great. Make sure you're playing in projects, and know the risk involved in them. Crypto is very, very speculative. TXC is a very new project in the crypto world. It's going through its bumps and grinds, as anybody who's been involved in it for a while has seen. There is a light at the end of the tunnel that hopefully we're going to get some clarity and some resolution on this soon, and the project can progress forward. Um, the mining being self-sufficient and profitable is huge for that project. Um, and then the crypto education's coming out. Crypto games are going to come out. So a lot of utilities coming in should see some upside on this is what I speculate. Again, not any kind of financial advice, just my personal opinion. I think even KuCoin did an article and they were speculating between $1.60 and $1.90, I think, on the other side of the legal speculation with TXC, as long as things go well or well enough that they can get it resolved and moving forward within a year, I think it said. That would be a 10x from this price or about a 9x. So I think they were speculating 6 to 9x if I remember the article correctly. So there is some good upside. It is just risky, and that's crypto. And just like these AI trading bots, they are risky. They are, with regulation changing so often, as soon as somebody doesn't like it, it could, you never know when it could get shut down or limited or something as governments and the banks and everybody is trying to finalize crypto speculation. But my trading got smoked. So lost. So far I've lost 60 bucks on that single trade. And we're coming up on 11:30, and I don't think, even with oil flying, I don't think I'm gonna get enough of a drop on QQQ to save me unless we gotta go all the way down to 578. And I think that doesn't help with max. Now it's reading. Of course, now I'm not showing that. Max pain. We zoom in on this is 581 still. Look at the volume. And there's a lot of action at the 580 mark, and that's what I was hoping to see. This is the chart that messed me up. I expected at least a test of 580 to sell the puts and maybe buy the calls before finishing in this 581. This is why this is max pain. Most contracts will die here and be out of the money. And then so I was only able to throw a $90 gamble basically, and I got the 579, which I thought was close enough, but never got it. A couple times I saw 15%, 16%, and I almost took it, but I was trying to get my 20, 22% and lost. So um, this is the world of speculation and being in these higher, riskier plays. Crypto, very speculative. Trading options can be very speculative, especially QQQ, which is all the tech sector. And then doing 0-day options is very risky. I do not suggest that for everybody. But this was just kind of a fun challenge for March that I gave myself, uh, and I lost. The bots won. The bots definitely won. So see how April goes. The market's in a position where it's going to be looking opportune for investment side of things more. I look at Intel is one that I've liked for a long time, and they've really held this lower 45 band or lower 40 band as good support. As long as nothing crazy happens, this is a long-term play that's in a good space to go. I really like MU came back and reopened after a crazy run. This is a good zone to look at adding their memory and chips also. Obviously, NVIDIA is kind of that higher on Mecca, but we had the run-ups, and now we're in this zone of reloading and opportunity to look at these long term. Tesla, everybody's coming back down. So whether you're dollar cost averaging for long-term holds or looking for opportune moments to get in, um, filling in this gap. So, Tesla's in a good spot to restart adding long term, long term if you're speculative, but oil is really messing everything up right now. We were hoping to get back down here in this 70 range, and we're going up. So, yeah, we'll see. Markets are closed tomorrow, except crypto will be active, and they don't close. The stock market will be closed. So everybody have a great 3-day weekend. We'll come up with something to get back into these videos now that I think my schedule is balancing out. I am working on doing mostly educational stuff now, so I probably won't do a challenge video where you follow me day trading. And I probably won't be doing the 0 day options as much. We might be looking at picking our pieces and getting into some longer term plays so that everybody can build some solid wealth as the opportunity is here. So just know 0 day options, very speculative, very risky. Options in general, very speculative, highly risky. Crypto, speculative, highly risky. Any of these AI trading bots that are trading for you, especially newer companies, as this technology is kind of rolling out and people are getting behind it, it's kind of a hot topic, are going to be speculative. So be careful. Any investment right now, you got to think anything that is willing to be lost, and you need to watch it. So anything that you're putting out there is not a set it and forget it. Um, any of the set it and forget it type investments are your bank CDs or treasury bills, and even those right now are kind of risky. The financial world is changing and pivoting, so make sure you educate yourself and are aware of what's going on, where everybody is going, and be mindful of where your money is so that you're not waking up to a surprise of some drastic news. That's my advice. That is my financial advice: is be wary of your money, be mindful of where it's at, and keep tabs on it so that we um, stop share. So that everybody is learning this and not losing. You don't want to lose. Steady wins are great to build, and but you got to be familiar and educated on all these different tools and options. So, kind of have gone through and we've played with the 0 days enough. I think I'm going to do something different for April. And yeah, keep this thing going. So I'm going to get back to making videos daily or at least every other day. And keep an eye out for that. And hopefully everybody's getting rich. So have a good day. Have a great weekend, and I'll catch you guys on the next one.